Hey, this is Justin with DayTradeTheMarkets.com on Monday, March 24th, and in this video I wanted to talk about a really, I think, important concept in terms of your trading strategy in a given day, and that is how you know when a breakout or a trend or what we call a vertical market is most likely for real or most likely going to happen, and then also how do you know, I guess this is versus more of a consolidating back and forth market, and then secondly, how do you know when that trend or that vertical move has most likely come to an end. So I wanted to talk about those two things. And this is a 1 minute chart of the ES today, about the first half of the day, just to show the sell-off and then when that sell-off came to an end. And I've got everything on here, but I think, in other words, I've got everything on the software, including the I've got the relative aggression bars and the high velocity moves. I've also got the support resistance zones and the filter and the decelerations on there, as well as the bigger picture lines. What I think I'm going to do, though, just to make this easy, is just put on the level 2 and level 3 relative aggression bars. And if you're not familiar with relative aggression bars, what those are, very briefly, these are kind of the crux of our software. We're looking to, the market really only moves. It only moves when one side, collectively, buyers or sellers, is more aggressive than the other. Okay? And so what we're trying to do with this software is determine, number one, which side, buyers or sellers, is more aggressive at a given moment. Then number two, not only which side in terms of the raw data, but to what degree or what relative nature that aggression is happening. Is this moderate buying aggression? Is this extreme buying aggression? Those are important things to know. And if we can find that, we have a pretty good roadmap to what's going on. So we want to especially focus in on these level 2 or strong, which are the dark green and red. And these are customizable. But even more so, we really want to look at these level 3 or extreme buying and selling aggression bars. Okay, so what I'm going to do here again is take off take off the filter, take off these resistance and support zones, take off the deceleration triangles there, and just leave on the aggression bars. So hold on one second. Okay, so again, all I've done is I've left on the level 2 or strong buying and selling bars, aggression bars, and the level 3 buying and selling aggression bars, as well as the high velocity move, which are these boxes here. Now those other indicators, the support resistance zones, the filters, the decelerations, those are all valuable pieces of evidence that I think absolutely help you make better sense of that, and I can put that back on as well at the end of this video. But for the sake of this quick video, I just wanted to make it as simple as possible, and I apologize for my voice. I'm fighting a bit of a cold. But anyway, we started off the day, and these blue lines here are just some key levels we want to watch. We wanted to watch how the market reacted around 54, how it reacted around 63. This 46 was a very important level for us, as it has been for a few days, to see if the market could get below that. That's kind of where we would shift our bias from mainly up to mainly down. And just as an aside here, you can see the market tested in here and tried to get really accept below 46, and by the end of the day we were back well above it, and we had some buying that came in pretty good. But anyway, the key I want to talk about is these level 3 bars especially. And you can see here we had an early low, not much of a low, but a low was formed. And then this is our first level 3 bar of the day, or extreme buying or selling bar of the day. You can see we had some strong selling that came in with some follow through and so forth. But the first extreme bar, which is really what we want to monitor especially, was a level 3 selling aggression bar on the low of the day. Now we know when we get one of these level 3 bars on the higher low of the day especially, that if there's follow through, it's a very good sign that a breakout is for real, that a trend is most likely developing, or a vertical mode is most likely developing. Especially that's the case if this gets immediate follow through. So we really want to ask ourselves, number one, can the high of this bar hold, and then can the bar get follow through? Okay, as long as that's in place, which just happened right there, that's telling us, number one, you don't want to fight that and be on the long side. At least if you did, you'd be in a very aggressive mode. Okay. Number two, the right side to be on, at least in the short run, is the downside, because this is showing us that this is most likely a for real move, and so we don't want to fight that. Okay. So then we get an attempted push here, rejected right away, and then we get another level. Here's basically a wave of selling with this high velocity move and 2 level 3 bars in a row. Okay, and so you can see we get a little bit of an attempted pushback here, but until the high of this selling wave is taken out, or even the high of these level 3 bars, however you want to define it, until that's taken out, we still have to say this trend is still in place. And you can see we test to the high of this selling wave, and then we have another selling wave that comes in and tests below this 46 level. And again, we have this nice selling wave, which includes this high velocity move and these two level 3 bars right in here. So again, until the high of that is taken out, we have to say certainly that we want to be careful being on the long side, and that the short side is the right side to be on at that moment in time, at least if you're thinking about the short term, roadmap of the market. So then here's our next level 3 bar on the low of the day. Now this is the first level 3 bar that you can see on a low of the day that didn't have its high hold and didn't have any follow through. Okay, so again, that's what we're asking ourselves: can the high of that bar hold, and can we get some follow through? And if you'll see that we also had some deceleration on this bar as well, and it was right at a support zone. Some other things when I show those other parts of the software. But the big thing we want to look at it is this is our first level 3 bar. This is our first level 3 bar made by sellers that didn't have follow through, and it was high, didn't hold. And you can see we took out the high of that. Then we got some full bars above that. So it's telling us, it's not necessarily telling us that buyers have taken over, but it is telling us this pure wave of selling, this vertical selling move, has at least become more of a two-sided or consolidating market. Then we want to see how the buyers react, or if the sellers can start again. But that's what it's telling us. Number one, when this level 3 bar comes in on the low of the day with follow through, that's telling us that a trend is most likely for real. Continues here, continues here. Okay, as long as those highs are maintained, we're in business. This is the first one where it's not maintained. Okay, so that's telling us we've stopped this one-sided vertical trend type of a move, and now we're at least two-sided. Now the buyers may take back over, but we're at least two-sided. Now some other things can help you with that. Let me throw the rest of the pieces of the evidence back on again, which would be the we've got the I'm showing relative aggression, at least the level 2 and level 3 and the high velocity. We can also look at the support resistance zones that are real time, the filter that's in real time, and then these decelerations that are in real time as well. Those can help you make even better sense of what's going on. So let me show you that. Okay, so I've put the other pieces of the software back on. And another way that you can answer this question of how do you know when a trend is most likely come to an end is you can see that the market, when we went to this two-sided activity more in here, and especially in here, you can see that we had this support and resistance zone formed. And again, what this is telling us, this is a support in green and resistance in red. It's not the be-all end-all, but it's simply telling us all things equal, be careful taking longs into this resistance. And if you're thinking about taking a short, it's better trade location. And be careful taking shorts into here. If you're thinking about taking a long, it's pretty good trade location, okay? Now, a good rule of thumb here is also, if we're in a consolidation, and we had a little bit of one formed here, you can see that we broke back through it and it turned red. Okay, so that's telling us this vertical is still underway. In this case, we had a support and resistance here that held for 2-3 hours there, and then we had the high of this taken out right in here, and it turned over from red to green. So that's another good indication that whatever vertical move on the downside was underway. And here, a bit of a shortcut to see that more in here like I was showing, but this is just further confirmation when this turns over. Let me take that stuff off so it's easier to see. Okay, so it's just a further confirmation of what's going on. So hopefully that makes sense. Just wanted to talk about that concept, and I mean there's a million ways that you can use this and help you make better decisions, but I think one of the good ways to use it, and one of the key questions you want to always be asking yourself when you're trading is, number one, is this market in a consolidating phase or in a vertical phase? How do you know if that's happening? How do you know if it's for real? How do you know when it's come to an end? And then, when you have that information, that just goes into your mixing bowl that you can mix up when, and really make sense of what's going on. So let us know if you have any questions about that, and we'll talk soon. Thanks.